This is a Stock Trading Reality Podcast, episode 79.
When I get stubborn and I say, okay, I just don't want to lose. It's like that competitiveness inside of me. And every time that happens, I lose money.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host,
who drinks apple cider vinegar for health benefits,
Clay Trader.
And while it may not taste the best and you can't drink it in large quantities, apple cider vinegar, I'm a big fan of it. And I realize this is kind of goofy because, I read it on the internet, therefore it's true. But I mean, if you do like Google searches for it and look on multiple sources, WebMD, Billy Bob's Medical School, stuff like that, it's supposed to be really good for you and have all sorts of like benefits. And so I would encourage, I'm not a nutritionist, so I check with your local health provider. But I would say at least consider adding, some apple cider vinegar into your daily diet because, like I said, Billy Bob's Medical School says that it's really good for you. And I definitely do drink it. Ches, are you an apple cider vinegar guy? Have you ever drank it, whatever the right word is there? Or?
So I had a manager who swore by it, and she would drink them every day, like I think one or two of them a day. To the point where she would send us to the Whole Foods to get like boxes of them for her because it was attached to our building. But so I only had one once. I thought it was an interesting flavor. It's actually completely fine for me. That whole kind of palate is totally good for me. But the funny thing is that she was oddly sick a lot of the time. So I'm not sure if maybe there was some other things going on with her. But yeah, she swore by the stuff. I only had it once, and I actually thought it was good. So I just don't go out of my way to purchase it.
Okay. Yeah. So, yeah, I guess something that you can consider. And I'd at least do some research into it. It's supposedly got some interesting health
really
benefits.
Good for you.
Yeah. I mean, I've grown like 8 inches since I started drinking it. So, I mean, it's good stuff. Anyways, that's not true. But today we have an awesome podcast with Hamlet. He goes by the same name in the chat room. But Hamlet's got quite the story. And I was inspired by it. Ches was inspired by it. We were just kind of talking like, hey, wow, that's good for him. He's making things out of things. And that'll make more sense as you go through the podcast. But he's also very upfront about some losses and just the pitfalls of trading. He's got a system and then certain things happen. And then all of a sudden something bad happens. And I'm just trying to talk vaguely because I don't want to ruin anything. But, it's a little bit of a longer interview. But listen to the whole thing. And it's an interesting story. I don't think that's going to be a problem. But a lot of great tidbits here and there. He definitely didn't do everything probably the way he should have and the way we preach around here. But he, fully disclosed that. Therein lies one of the many kind of nuggets of wisdom and nuggets of experience that you can take from him and hopefully use, to progress in your journey. So without further ado, let's get started with Hamlet. Hamlet, how are you doing? Welcome to the show.
I'm doing great. Thank you. It's a pleasure to be here, really.
Perfect. Now, right before we got started, Hamlet was kind of like, now I may stumble over some words. I've never really been trust me, man, you got nothing to worry about. And as Ches and I were saying, hey, that makes us feel better because we're sure not perfect. So, screw up as many times as you want because that's just going to give me confidence that I'm not doing, I'm okay. I'm a human being. So definitely I thought that was funny because trust me, nothing to worry about there. And you also revealed something about ESPN. So do you have plans to bring that up? Is that going to come up at some point?
Yeah, that's the whole thing. The whole thing starts there because...
Okay.
Yeah, that's chronologically. I'm gonna start.
All right, because if it's not really part of the story, I got to ask you about it at some point in time.
He wants to know no matter what, but as long as it fits in the story, that's good. We like that.
Yeah, Hamlet started to spill the beans a little bit. I don't really like that when we get guests on. It's very small talk. Let's just get to the interview because as we always say, we want to make this as real as possible. Like we're just sitting down for coffee. Don't really know one another, and that way the conversation is genuine as possible. So we spilled the beans a tad there, but piqued my interest. So I'm glad it will come up anyways. And you said kind of towards the beginning. So let's start right there at the beginning. What got you interested in the markets? What got you kind of not only interested, but intrigued you enough to say, hey, you know what? I want to try to get a little bit more active with this and, kind of put some of my hard-earned money on the line?
Well, I would say about 6 months ago, I had no idea. I had no knowledge of the markets or anything like that. I've always interested me in the past. I've always, looked at the Financial Channel and just, I said, what's the Dow? What's the Nasdaq? What's the S&P 500? So I've always piqued my interest, but I always thought it was I have to go back to school and, get a whole new degree again. And, I just thought it was that complicated that I had to go back to school. But, what really got me interested is my wife and I graduated from Valparaiso University. We graduated about 3 years ago.
Indiana, right?
Yes. It's about 40 minutes outside of Chicago.
Yep. Okay.
Yeah, I know you're out in Michigan, so I'm
sure I always remember Valparaiso because Bryce Drew, he drilled that shot in the NCAA tournament several years ago, and that was always right. Valpo. So,
1998.
Was that 19? Yep, I still remember that shot. So that's
against Ole Miss.
Was it against Ole Miss? All right. So you're a true Valpo. See, I even know the nickname for Valpo.
Valpo. That's right.
You're a true Valpo grad because you remember that instant. But yeah, Valparaiso has always stuck out. Anyways, this is not a topic of sports. So you and your wife graduated from Valparaiso, which is in Indiana. Proceed onwards.
All right. So, I started applying for. I'm a digital media major. I was the vice president of our campus television channel and things like that. I got really involved with TV and producing and even the technical part of it. So I graduated and then I got a job at ESPN first. Before that, actually, I had a internship at the Syracuse Chiefs. That's AAA for the Washington Nationals. I was actually technical directing for their webcast. So that was a great experience. So that allowed me to go together with my degree, allowed me to go into ESPN. So I went. I got hired in the media technology department. I was a technical operator. So I was doing anything from like media transfers to I would convert different file codecs to other codecs because of replay machines that we did. I don't want to get too technical, but those are the kind of things I did there, and I did that for about a year. Then my end goal in the industry was actually to become a technical director. So actually, technical direct the different shows. So I started looking into another department at ESPN. It's called the studio operations department. So they take care of the studio people and the control room people, which there are two different things. But I was interested more into the studio. I'm sorry, not the studio, the control room part of it. That's where the big switcher and things like that.
And all the monitors are sitting around. Yeah, that's.
Yeah, exactly.
Yep, sweet.
So I was interested in that position. So, but to get there, it was going to take me a long time. But I said, you know what? I'm just going to jump over groups. So I applied for this. It was called a media operator position. It was a nice bump in pay, but terrible hours, absolutely terrible hours. My days off completely changed. I couldn't see my wife ever. I mean, we didn't have days off together or anything. She works days and I work nights. She has Monday to Friday, a 9-to-5 job. She works for the Connecticut Department of Agriculture. So, it was really bad. It was really bad. So 6 months into this job, I started getting really, really depressed. I mean, I was like, my goodness, what did I get into? I thought I loved this. I went to school for this, but for some reason, I'm losing my interest in what I'm doing, which it was odd because before the first year, to be completely honest, the first year I really had like a drive and motivation for the job. But once I changed department, everything changed just because of the reasons I just gave. But
yeah, it's crazy though, because I mean, for me, it's like, whoa, that's sweet. You work for ESPN, but I mean, based on what you described, I kind of went through the same thing mentally. I'm like, oh, that doesn't, yeah, ESPN, that's cool, but that doesn't sound, that sounds pretty miserable, doesn't it, Ches?
Yeah, I was going to say the grass is always greener. A lot of things that or companies especially you believe in, things you really like. When you look at the nitty gritty background, there's always kind of positions and just things in general that, it's not all roses and flowers. It's, it could just be, working the third shift and, never seeing your wife. So yeah, it does not sound very enjoyable.
Yeah. So what you've said totally makes sense. And, it sounds like Jez and I both went on the same kind of mental journey with you. Oh, that's sweet. Ugh, no, that doesn't sound so sweet anymore. So anyway, you had a passion for it. You got kind of almost a dream job. And then 6 months later, you're feeling what I would probably some burnout. Is that a fair classification?
Yes. I was initially, my first year at ESPN, it was great. But once I changed over to that second position in that other department, everything started to change. My mind completely started to change, and I completely started getting depressed. Like I said, you can't see your wife. You're basically working the night shift. The way the other department was structured, you didn't really have much interaction with other coworkers because you're working in this control room environment, which is high pressure. Doing a sports center, it's a high pressure situation.
I gotta just, my wife and I, we always have this joke with like live TV, which is ESPN and stuff. It's always like if like a camera stays on somebody too long, or if somebody's like, or the camera is on somebody who should be talking, but that person's not talking. My wife and I, our joke is always like, somebody's getting yelled at right now, or hope somebody just lost their jobs, because to your point, like that would be a very high stress when millions of people notice a mistake because they're just watching live or whatever.
I was going to say, it's because it's live. They can't just go back and cut it together how it needs to be. You're doing it all on the fly. You never know who's really going to jump in next. It's kind of crazy.
So that's what my wife and I always do is, ooh, somebody's really getting yelled at right now. Or somebody had just lost their job right there. So I can't say I've been there, but I can definitely understand the high pressure aspect of the job.
Yeah, and somebody definitely gets yelled at.
I can't wait to tell my wife about this interview. I'm like, guess what, Abby? Guess who I just talked to today? Somebody that confirms our theory that people are getting yelled at. So that's awesome.
Yeah, people get yelled at. There's cuss words thrown out across the room. It gets pretty hectic. But but back to my point. It was just high pressure situations. It's a really intense environment, and that's just studio shows. When you go on the road and you start doing like nationwide telecasts, like Monday Night Baseball, Sunday Night Baseball, Wednesday Night Baseball, and then if you go to the football, it's even more stuff. You got millions and millions of people watching, and it can get pretty intense.
So you find out, okay, this is not for me. So is this what finally drove you into the markets, or where did you go from this point in your journey?
No, this going to this department and experiencing all this was fine, but just basically what drove me into the markets. It's realizing that, okay, it's going to take me so long to get to where I want to go. Financially, professionally, it was just going to take so long, and you had to do so much more work and I don't care about the work because I currently work 7 days a week, 16-hour days. So I really don't mind the work, but it was just the amount of work. It was not worth the amount of time you had to put in. I don't know if that makes any sense, but
no, that makes very good sense.
So it just was not worth it. So I was bored out of my mind. I wasn't being challenged at all at that point. And I just said, I turned it in autopilot with them, and I started looking into the internet. I said, okay, I want to learn the market. So I'm gonna research, because I can be a research maniac. I research and research and research, and I just don't jump at the first thing that's thrown at me. I do my due diligence with stuff. So I went and looked at different stuff. I will never forget this. I read a lot of reviews about you, and I read this one review, and that's what actually sold me on it. He was saying that you had that your answers were very generic and things like that, but not to be too long-winded, he said at the end of the day, I've fact-checked everything he has said and everything he advertises, and the dude is truly honest. I don't agree with a lot of the stuff he teaches or things like that, but the guy is truly an honest person. So
hey, I'll take that all day long.
I would say, well, kudos to that guy for actually being, doing his due diligence on you, Clay, and obviously for you, Hamlet, checking into that. But yeah, even though the guy didn't really like it that much, at least he could confirm that you are an honest guy. So yeah,
I will. Whoever that person is, I'll give them credit. I mean, you don't have to like me, but at least be upfront about it, and that person was upfront about it. So yeah, props to them, and thank you for whoever that is. So they for just being real about it. So appreciate that. So you did your research. Out of curiosity, though, when you first got into the market, like, do you remember what your first Google search was? Like, just because at the very beginning, it's fascinating. What was in your mind?
My first Google search is how to learn how to day trade.
Okay, just so something broad like that. So that can definitely take you down quite a few rabbit holes.
There's a lot of rabbit holes you can go down with that phrase specifically.
But so interesting. Anyways, so you read the review on me. All right, this Clay Trader guy's honest. So take us from that point.
So I started looking into your YouTube videos. So I looked at quite a bit of them. I went on your site and I started looking at the free stuff you offered, and I said, I know you say before in previous podcasts, I didn't completely trust you 100% because I didn't go into Clay Trader University right away.
You're not the first, and that's totally understandable.
There's nothing wrong with that.
But I went ahead and purchased robotic trading, and I started going through the courses. And I also started reading on my own. Like I started reading a lot of Investopedia. I got a subscription right away to IBD because I researched and I've heard there were great things said about IBD. I also got a subscription with the Wall Street Journal. And let me say this for your listeners and for the new people out there, you don't have to do any of this to trade. You do have to educate yourself before you trade, but you don't have to get all these subscriptions. I just want to say that.
I love the fact that you're the kind of person, and I'm not just generalizing because I'm the same exact way. You don't go into things lightly. You hit it right away with a bunch of news sources. You do a bunch of searches. You're looking up stuff. You're skeptical about things, and you're really treating this already like it's something serious. This isn't like something you're gonna just brush up on Saturdays and then just throw your money blindly at it. So this is something you're treating seriously, and I want people to really kind of take notice of that because you're not messing around. I mean, you didn't subscribe to multiple news sources and kind of to read and learn if you weren't kind of planning on taking this seriously. So kudos to you first off. But I am going to agree with you there. You definitely don't need to do all of that, but you do need to do some education. So thank you for at least kind of disclaiming that. So you kind of get all this stuff. You go through the course now. And I actually think that's pretty interesting as well because I wonder if you would have went down the robotic trading route of using charts if you started with the IBD route and value investing or anything like that. Do you think you still would have taken the same approach you did?
No. I would have. I actually was looking for the technical side of it because I looked into the fundamentals. I even bought a book, and I said, okay, all this information. How am I gonna ever trade with all this crazy stuff? I mean, you have to memorize so many things. So I decided I said there's got to be another way. I mean, there was a P ratios and market capitalization. I mean, it's just a ton of stuff thrown at you in these books. So I said there's got to be another way. And when I did my research and I found Clay, I was like, okay, technical trading.
I got to cut you off. This is I promise viewers, none of this was staged, none of this was lined up, but last podcast, for those of you that religiously watch, Ches, did we not just have the same conversation about fundamentals and it just being so time consuming? As Hamlet said, I got to memorize all this stuff. What's the difference between a PE ratio and, last week, for you listeners, hopefully you remember that, but isn't that the stars have aligned nicely here.
They have aligned nicely, and you would have been spending 16 hours a day instead of focusing on your job or your company that you just started. You would have been spending that digging through financial statements and trying to track their PE trends and stuff. And it's nice to have everything all on the chart for you. I agree.
Yeah. So I sorry to cut you off, but it was last week that same topic was discussed. And the crazy thing is, when we're recording this, Hamlet does not listen to last week's podcast, so he has no idea. So this was totally organic the way it brought up, but Hamlet just confirms that if you're feeling that way, if you're feeling overwhelmed by all this balance sheets and cash flow statements and press releases and who's this management guy, I fully understand, and that's why I'm a big fan of charts. So sorry to cut you off there, but so you're not feeling it. You found me. Hey, I like this technical analysis thing. So continue from there.
So I went through robotic training, and I really. Not only once, and to be honest, I have not finished all your courses because I like to finish a course and then try it out what I learned, and then just move on from there. But I have not finished all of the courses. I want to say that. But after I finished robotic training, I said, I open an account. I think I put $1,000 in, and I started trading. I started trading just using, and this is, I'm not even kidding, using just a volume, price action, and SMAs, simple moving averages, with the 20 SMA and the Bollinger Bands, and basically volume. That's all I use when I started trading, and that it was 2 straight months of doing it. I have to be honest, I did not paper trade. I know how much you harp on that, and I will say this. Everyone that starts new in the market should paper trade. They have to. You have to paper trade. I didn't paper trade.
Well, you're leaving us hanging on our seats. So you started trading, you're using... Now, I have no problem. You're keeping it simple, stupid. You're using the KISS method. I'm a big fan of the KISS method. As Ches always says, these people with 50 blended indicators and overlays and all this stuff, and they think they got the holy grail.
It sets up one trade a decade, and they're waiting around for the 50 indicators to line up. Yep.
Yeah, that's so I have no problem there. But how did it go?
So then I eventually started looking at some lagging indicators like the MACD and the RSI and things like that. But I never go into a position just solely basing it on those lagging indicators. My main thing is price action and Bollinger Bands and moving averages, and obviously volume. So I started trading. I think I was trading GoPro because with $1,000, you really, I had in my mind at that point, I was like, okay, maybe I can turn this $1,000 into 5, 10, 15, 20. I started trading, and I quickly realized that was not the case because I just didn't have. I had an individual cash account. I didn't have enough capital, so I started trading GoPro. I bought like 5 different tickers. GoPro, I think, is Amberell, AMBA. I also bought CARA, Cara Therapeutics. I'll never forget that. So I honestly started trading there, and had a couple of winning trades where I'll make $30 here, $50 there. I had a couple of losing trades too where I lost $15, $20. So basically I took those $1,000 and said, this is going to be my paper trading tool because I wanted that real emotion because I know myself. I'm an emotional guy. So I'm not going to get as excited, and it's not going to work for me as much if I paper trade. But that's just me,
Yeah, and that's completely reasonable. And like you said, the important thing is that you didn't say that, I had a couple winning trades of $50 and I had a couple losing trades of $300. Okay, because that's usually where people get themselves in trouble. Now, another thing that obviously we always harp on is risk management, which I just kind of talked about briefly. But what was your kind of method for that? Did you already go through the RVR trading course at this time, or what was your were you just able to naturally clip your losses really quickly, or was it something you had to learn as you kind of went through the $1,000 account?
No, I didn't go at that point. I didn't go through RVR, but I've always listened to Clay and all of his podcasts to put a stop loss in place. So I would automatically, when I put in my order, I'll have a stop loss in place.
And and you've always done that right from the start?
I've always done that right from the start because I discovered you right from the start. You see, a lot of the previous guys, a lot of the members in the community, they've gone through penny stocks and things like that. They've gotten in through other routes before they gotten to you, but not me. I found your courses right away. I mean, so I followed everything that you said and everything. So even though I didn't go through RVR at that point, I was using stop loss just from listening to your podcast.
And this brings up a fantastic real life scenario. Again, none of this is staged. We're just hanging out right now. But Ches and I have talked about it. The big risk of the whole free education and the whole just going through the sea of data that's out there is you can allow bad habits to creep in. And most people, myself included, Ches, most people, they get in the habit of losses are bad. They don't even know what a stop loss is. Heck, there's some people out there that freaking preach that stop losses are for losers. I never use a stop loss, just keep averaging down. I mean, there's literally people, and some people, that's the first person they stumble across. They're getting taught this nonsense. Stop losses are only losers use stop losses. Just average down, it'll bounce back up. There's lots of nonsense out there. But to Hamlet's point, good thing he did his research and stuff. He actually came across, and I'm not the only person out there that preaches stop losses. So I'm not saying that, here we offer he stumbled across somebody that said preaches. I mean, Ches and I, we beat the dead horse all the time about risk management, but you got to have that. And here Hamlet is. That's the first people he stumbled across was somebody preaching risk management. So it's his habit from day one, put in a stop loss. Now, whether or not his stop loss is at logical spots, that's a whole nother different, conversation. But at least he's putting in a stop loss. So the big risk of, and I realize most people listening, if you're new, whatever, dude, you're just saying that because you sell courses and you want me to buy your course. You don't want me to go the free education route. Hey, that's fine. Go the free education route. I hope you don't come across somebody that's sitting there preaching that stop losses are for losers, and averaging down is a good strategy. But so fantastic point there, and that makes total sense on why you've always just been good at risk managing from the get-go because you put in those stop losses. Because the way Ches was, I was waiting for. I made $50, made 75, and then I lost 300. But your losses, what'd you say, were like $15 or something like that?
$15, $20. Yeah, they were all small.
$30. They were all small at the beginning.
Oh yeah,
they were all small,
and they're going to be when you just are putting in stop losses. That's the whole point of them. So you're trading. Is your account growing at this point, or is it kind of just a slosh back and forth, or what's going on at this part or at this time in terms of your actual trading capital?
The first 2 months I was ahead for a little bit. Then I was breaking even. Average, I was breaking even. I was just basically implementing everything I learned. And by the way, my stop loss, I use resistance levels and support levels and resistance levels. That's that's what I use to place my stop losses. And for my for my out to come out of position, I just use resistance levels too. So support and resistance, SMAs, Bollinger Bands. They're absolutely great, and at that point I was really enjoying myself and just kind of learning everything. I was with TradingView. I had the Pay Plus account with TradingView, so I had real time at that point with TradingView. At the beginning, I was trading with a 15-minute delay for like the first week. So
That happens. We have just about everybody we talk to does that at least once. So you only lasted a week though. That's good. You weren't like some of the other podcast guests that we've had, or they traded like that for like more than a month with real money. So yeah, good job getting the live data. You definitely need that.
Yeah. So I once I got the live data, it was a lot better. I noticed a big difference. So it was good. I was just with the mindset that I was going, I was learning and I was going through. I kept going through the courses again and again. I like to implement a strategy, but if something goes wrong, I like to go. I don't go back to the drawing board and just say, okay, scrap everything and let's just start over. No, I knew I did something wrong. I either had a bad entry or I missed something on the chart, because many people said before on this podcast, the chart never lies. So,
and I just before I forget, because I think it's a very good point. So you put in $1,000. Could you have put in a lot more into a trading account? I mean, I'm not trying to get into your personal finances, but I mean, did you have access to more money than $1,000?
Oh, it's coming.
Oh,
it's coming.
Okay, but it's still
yeah. The story gets on with more, but yes, I had access to more money to answer your question.
So to the point here is because we do preach paper trading a lot here, and it's a fantastic thing. But Hamlet said it perfectly. I mean, to bring in the true emotions of things, you need to use some real money. The problem that Ches and I have, and which you should have, is let's say you have access to $1,000. That's it. I have $1,000 free in my budget that I can use for trading. Paper trading, I need to practice with real money. If you then go fund your account with $1,000, that's no good. That's what a lot of people do. Now, if all you have access to is $1,000 and you want to bring some emotions into it by using real money, fine. But I'd say $300 at most you should fund your account with, because those voices are going to show up. And all of a sudden, before you know it, your $1,000 account is going to be all in one position when you're just supposed to be learning the ropes. But the problem is the $1,000 is all you have. So to Hamlet's point, the one thing he did do right is it's not like he took the max amount of money he had access to and threw it all into his account right from the get-go. He took a small sliver of it to do some practicing, to bring some emotion into things, and I have no problem with that. It's the people that, I have X amount, and I'm going to use X amount for the practicing. That is a risky game. But
I'm going to give away some of the course information for free here, guys. So make sure you get your pen and your paper out, guys. Clay actually uses.
They're going to be driving
analogy.
great. Yeah, here come.
Yeah, don't pull over your car so you can write this down. But Clay actually uses the analogy in one of the courses that think of your entire trading account like a scuba tank, and it's filled with air. Hamlet is not using the whole scuba tank to kind of get his feet wet. Hamlet is using a breath or two of air in his whole tank. And this is just very basic risk management. To Clay's point, if you only have $1,000 and you only, you should not throw all of that into your first account. You have to get your feet wet with, $300, $200. And you should never find yourself with, fully taxed on that, that size already. Because if you're doing that, you're going to do that with a big boy account too. So, just very, very basic risk management observed right up front. So that's good. But Hamlet said we're getting to a little bigger point here. So now
we're approaching at the edge of my seat here or something. Yeah. So, anyways, continue on. I'm on the edge of my seat.
And let me say this again. And this is not a plug or anything. And this is not staged, because this is other than email and things. This is my first time just really talking to Clay and Nate and Chaz. But you should paper trade. You do go ahead and paper trade. Do not just jump into live action. Do not do that. Not everyone is the same. I would highly recommend that you should paper trade before you start going with live money. That's you guys are absolutely right. 100%. I didn't do it, but you should do it.
Well said. I have no complaints there. So come on, man! I'm sitting on the edge of my seat. So you're saying it gets. Let's go. Okay, so you've been doing things right, but I have a feeling things are gonna go array here. So, anyways, keep going.
All right. So after a couple of months, I said I was sitting in my trading computer, and at that point, I bought 3 monitors. I bought a real nice computer. I looked at everything you said on your website when it came to all the reference and things to monitors and equipment and things like that. So I used that as a reference. So at this point, I've been trading for 2 months, still going through the courses.
So you had bought more courses at this time, or are you still just doing robotic trading?
No, I did robotic trading about a month and a half in of robotic trading. I said I'm gonna go in and buy Clay Trader University.
Oh, okay. So at that point, you got all the courses. Gotcha.
Because once I saw your method of teaching and the way that the progression of the courses were, and just I was able to understand really everything so well, and just everything really makes sense to me. I'm a technical guy. I'm a technical guy. Even in my own career, I was in the technical side of things. So the technical side of trading, I can really understand it. That's the best way to put it. So that was absolutely music to my ears once I discovered that.
So you're serious though. You've gotten Clay Trading University. You've bought in 3 monitors, a new computer. So you're rearing up. So where does it go from here? You are now in full blown serious mode.
Yeah, I'm in full blown serious mode. So I go ahead and I take $15,000 out of my
woo.
Yeah, I take $15,000 out of my 401k. And
out of your 401k, that's your retirement funds, man.
Yeah, I take it out of my 401k. So I promise it doesn't. No, let me not say that. But I take it out of my.
Let's go. This is getting good.
I take it out of my 401k. So I put it in my trading account. I did that in a matter of. It was just 48 hours. I did that. So I saw an opportunity. Oh. And this is the best thing. I got a margin account at that point. I applied for a margin account.
Leverage to the gills. Here we go.
Yeah, here we go. So once I did that, I started trading. But by that point, I was going through options to the options course. But I was not doing options. I was just Actually, I did paper trade options, by the way. So I was starting to do the simplify options course. So, but I was not doing options. So then I have this account with $15,000 times 3 times the leverage. So it was, I think my buying power at one point it was 40,000 at that point or something like that.
45,000 probably.
Yep.
45,000. Yeah. So I see an opportunity. I see an opportunity to go into a position with JetBlue and Virgin America. I don't know if you guys remember about the speculation. To be completely honest, I love speculation trading. I know it could be risky, and I do not suggest that to somebody that's completely brand new. But I went and took a 400 share position on Virgin America, on the speculation that it was gonna get bought by Alaska Air.
So at this point, you are out of the realm of charts now. You are just straight up using a fundamental thesis here that they were going to be purchased by somebody else.
Yes.
I mean, so you're out of the realm of charts, just so listeners understand. You're at this point, you're essentially not using charts anymore.
No,
you're just...
no. I was looking at the daily chart because I was trying to swing trade that position. I was trying to swing trade it. So I did look at the chart, at the daily chart of it, and it had it. It was in a very nice trend. But I was going more for the fundamental side and the speculation side because of the rumors of the acquisition and from all of the things I have read. Yes, on that part, you're absolutely right.
Okay, so I don't think this. Anyways, I don't think they bought. But I don't know. How'd this all turn out? I guess is the best question here.
Okay, so the Alaska Air, I will never forget this. Alaska Air was on a Saturday. I looked at my phone on a Saturday, the Wall Street Journal, and said Alaska Air has bought, because it was between Alaska Air and JetBlue. they didn't know which one was gonna acquire Virgin America. So when Virgin America got acquired by Alaska Air, and it was acquired, I think, by I don't remember exactly the amount, but it was maybe 50 something or 30 something $1 billion from there. So I at that point I took a position at 40. It was either 38 or 30. Yeah, it was. I took a position at 38, and the very next morning on Monday, I sold at 56 something. So I made a $6,600 profit on that trade.
Well done. Very nice.
Yeah, that's nice. I'm looking at the chart right now, and you were actually positioned in a flag before it actually.
Okay, so that is where the charts. That's where the charts come into play that he was mentioning earlier. Was he was looking at the pattern there?
Yes, I can confirm that the evidence does prove that there was a technical pattern on the daily chart. It wasn't just pure speculation. He was still utilizing a chart.
Okay, all right. So it was a combo of charts and fundamental. Okay, so thank you for checking that. Not that we didn't believe you, but so you saw. Well, you already mentioned the word trend. So now it sounds like you had a bullish pattern within a bullish trend, and then there were these other rumors going around. So all right, well, that's a good looking. That's a very nice trade. So where did
we got a $21,000 account now? So what are we doing? Are we doing more speculation or what are we doing?
Yep, exactly. Are you like the greatest trader ever now, or I mean, what's your mindset at this point?
No, my mindset at this point. I mean, and that was, to be honest with you, that was foolish, because now with all the knowledge that I have now and everything I've learned after that, I mean, taking a position after 2 months of trading of almost 30-something thousand, 40, it was almost 40-something $1,000. It was insane. It was really insane. I mean, when I look at it now, I look back on it now. I say to myself, okay, that was crazy. That was. I mean, I should have never done that.
Okay, I appreciate the honesty, because from Ches and I's perspective, we don't know. Maybe because to us that all sounded logical. I mean, it sounded like a good thesis and premise, but we don't have hindsight. But so I appreciate you just saying, well, now with what I know and using my own personal hindsight, yeah, that was not good. So thank you for admitting that, because you could sit here and play it off like, oh yeah, and from there it only got better. But knowing what you know now, as you just admitted, that probably wasn't the best trade. And listeners may be saying, what are you talking about? This you just made $6,600. Well, really only experience can kind of teach what probably Hamlet's getting at with what he knows now. But so thank you for that full disclosure. So it went, $6,600. Your account's growing. I mean, did you just keep at it, or I'm starting to wonder, when did this whole business venture start up that you had mentioned you were starting? Is that coming up here soon?
Yes. So to go back to that trade, it was all based primarily on technicals on the chart. It was mainly based on that. I was just using this speculation because it was just bullish pattern, bullish trend. It was everything. But the speculation, it was just driving the stock up and up. So it was almost, I thought, and I think that was a bad word at that time, but it was almost like an easy trade right in front of me. And there's not such thing as an easy trade.
Well said, sir.
You know what I mean.
Well said. Yeah, I know what you said, but yeah, good correct. Because sometimes I catch myself using the word easy, and it's like, there's nothing really easy in the market. So yeah, well said.
So at this point, my account grew by quite a big chunk. So I started. I kept trading. I never took a big position like that again. But after that position, I started trading, and I was profitable for about a month. I was very profitable about a month. I was doing mostly Facebook and Twitter at that point. And my account grew in a matter of 4 weeks. It grew another $800, something like that. So I was feeling great. I was doing good. I took a position after that on JetBlue, which really humbled me a little bit, because that was my worst trade. I think pretty much my second worst trade ever. So I misread a a bullish a pole flag and it completely went the other way, and it really that was $1,000 loss there, and I was a little devastated after that.
Where
Now-
was your? Go ahead, Chaz. No, go, Chaz.
I was gonna say, did you change how you were managing your risk kind of from prior to this point because you were on a really good kind of win streak, or were you just taking a little bit of a larger position than you normally do? Why exactly did you, or was the chart just logically at that level and it was just kind of not the best risk versus reward trade?
I got stubborn, and I started on that trade. For some reason, I used the mental stop.
Oh, here we go. The mental stop.
There's the change up.
Yep, there's the change of the strategy right there.
I used the mental stop, and I kept averaging down.
There's the second. There's the second domino.
Two
right
change
there.
ups right there.
Yeah, two. Isn't it amazing though? You break rules and things start to go bad when you break rules. And I'll be the first to admit, you wouldn't think that. All right, mental versus a hard line stop. That's a minor tweak. That's just a small little rule break. And of course, in your mind, you're not going to say rule break. You're just going to say, I'm going to tweak this strategy a little bit. That's how the voices in your head operate and lie. They're not going to straight up tell you, all right, we're going to break rules. They're going to say, hey, Hamlet, let's tweak, let's rearrange your strategy here just a little bit. And then before you know it, they're going, hey, let's better our cost basis. So they're not going to say, let's just average down. They're going to say, let's improve. I mean, voices are a tricky thing. And so one minor rule break turns into another big one. So that makes sense on how you ultimately then, lost $1,000. So, but it's not, you said something interesting. You said that was your second worst trade. So let's talk about this. If you're willing, let's talk about this worst trade, because there's something worse than this then.
Yes, that one was last week, but we're not there yet. But yes, I have a second worst trade. But the thing is that when I get stubborn and I say, okay, I just don't want to lose. It's like that competitiveness inside of me, and every time that happens, I lose money. But honestly, I mean, I lose money every time that happens. You have to let those losers go. You got to let them go.
Trading is not a competitive sport. As much as some people may want to say that, trading is not a competitive sport.
There's no room for ego.
There's no room for ego. If you're wrong, peace out, cut the loss, move on. So that's, that's a great quote. Whenever you get stubborn, whenever you get competitive, you lose money. I have been there because I am quite a competitive person myself, and there is no room for competitiveness in the world of trading. So, anyways, keep on going.
So I at that point I was, I said, okay, you can't do that. You absolutely cannot do that. You gotta use risk mitigation. You gotta use stop losses. That's not the way to trade. So after that $1,000 loss, I said, I'm gonna go and I'm gonna see what I missed. I'm gonna see what I missed, and then that's when everything came back. And I said, okay, I changed the strategy here. I changed the strategy there. So this is why this happened. So I took a little break. I took like about a week, 2 weeks break, and that time I was still working at ESPN, and I was trading during the day. But what I was doing is I was still looking at the markets. I mean, with my 3 monitors and everything, but I was taking your courses. I was full time taking your courses. So I was at that point I was going through RVR, which I have not finished yet, but I'm almost done with it. And I was going through Options Simplified, which I'm fully done with that one. So once I finished the Options Simplified, I started. I said, okay, I'm gonna go back to start trading, and I started simply. At heart, I'm a day trader. It just makes me nervous to just go to sleep and thinking, okay, I have an open position and those gap downs and those. I mean, it's nice when it gaps up, but it sucks when it gaps down. I mean, it absolutely sucks. So I really love to day trade. I'm in and out of a position in a day, and I can just see my profit, and I can just do that every day, and not have to worry about waking up the next day and thinking, okay, Now I'm down because either because of the gap downs and up or because of the theta when it comes to options. So at that point, I finished the options course and I started day trading calls and puts. Started day trading calls and puts, and I mean something just magically just clicked in my head the way I understood the all the Greeks and the way the options work, and that it's just intrigued me so much. So I went through the courses over and over again, and just understanding volatility and how volatility works. So it was just fascinating to me, that course. I mean, and right now, and since that day that I got back to trading after taking a couple of weeks off, I am 100% an options trader, and I would not do anything else.
All right, and a lot of members have gone down that path because there's just a lot of benefits to options, assuming you put in the time and effort to learn them, which you just said that you've gone over the courses multiple times. But I want to hear what happened, I guess, a week ago as of the time of this recording. What happened with this really bad trade?
Well, this really bad trade. I had options with a strike at 40. I think at sub 40 with Yahoo. So I was I think I had 10 calls at 40 strike price at 40 with Yahoo, and I was waiting for the sale. I was waiting for the sale of Yahoo. I was doing well. I was doing well with it. As soon as the sale was announced, it's just huge disappointment. So I got stubborn again. And I lost another $1,000. So it was one of those where again I broke my rules and I paid for it.
And you said you were doing well, right? You were doing well with it. And then a little bit of adversity hit, and you broke rules by getting stubborn. And once again, thank you for admitting, but lost another $1,000. So man, stubbornness that's kind of an expensive emotion, isn't it?
You got to get a poster printed out that says "Stick to the rules or lose $1,000," or you should just take $1,000 out of your account and put it into your savings or something. Because we gotta figure out a way to kind of keep you from breaking those rules.
But once I started with options and I started applying all of my knowledge from robotic trading and everything from price action to volume. Volume is very, very, in my opinion, very important when it comes to options. So, I had great returns on options even before this terrible trade about a week ago. I've had 500% returns on some of these because I like to play Amazon and Tesla. I know the Tesla right now not so much because nobody can figure that one out. It's better to now I'm going through more of advanced options, but at that point I was just doing basically Amazon, Apple, Facebook, and GoPro as well.
So what I've kind of gathered here is, well, first off, he mentioned 500% with yeah, that's a lot of money, but options, yeah, they definitely can bring those types of returns. So he's not just pulling that number out of thin air. In fact, we'll put this in the show notes. Penny stocks on steroids. If you watch that video, I go over quite a few examples of how options actually kind of function and the returns that they can make you. So 500% is by no means pull it out of thin air. But it sounds like what I've gathered is where you stand in your trading right now, you have a strategy that works as long as you follow the strategy. Whenever you've broken the rules of that strategy, that's what's generated the $2,000 losses. Is that a fair kind of summation of where you currently stand right now in your journey?
Yes, as long as I follow what I've learned in the courses. And again, this is not a plug-in, ladies and gentlemen. It's just real. As long as you follow the technical trading that you teach on those courses, and you're not always going to win. I mean,
yes, good.
You're not always going to win. I mean, you can have a winning rate of 40%, and you can still be a profitable trader.
Absolutely.
You just have to let those losers go and cut them fast. Because I might have a 6 losing trade out of 10 trades, but my 4 winning trades are, I let the trade work for me. So and the reason I've been profitable, it's because I let them go right away. Now, as soon as I get stubborn, that's when it comes back and bites me.
There's 1,000. And the thing that I love when you're right, but you may be thinking that makes no sense. If he's losing 60% of the time in this example, he's lying. There's no way you can be green. Well, there's a lot of things in the market we can't control. In fact, most things as traders we can't control. But one of those things is we can't control how big a win could actually be. So when you stop and think about that, in fact, I'm watching a chart right now that's absolutely exploding, and it's like, holy smokes. But I have no control over how high this can go. And if I was long right now, isn't that a great thing? Stop and think about it. Isn't that a great thing that to not be able to control as a trader of how big a winning trade could be? But what can we control? We can control how big a losing trade can be, because if we just cut it like Hamlet's saying, awesome. We have controlled our risk. But on the flip side, we cannot control how big a win can be. Now, of course, we can control it if we just cut ourselves short and hop out for some random reason. But if you do what you're supposed to do and what is taught and manage the trade properly, the sky's the limit. So that is exactly what Hamlet's saying and getting at when he's saying, as long as I'm following my rules, cutting the losers fast, letting the winners win, then that is how you can lose 60% of the time and even higher failure rates and still be okay. So well said. And looking at the time, we got to start to bring things up. But and I want to ask you one more question before we move into our typical questions. But on an encouraging note, man, Hamlet, you're killing it as long as you follow the rules from what you've said and the way and I can tell you are, because you're discussing things in a very logical manner. But I mean, right, Ches? If he sticks to the rules, he's good.
If he sticks to the rules, doesn't deviate from the plan, doesn't go to a mental stop loss, doesn't average down, he knows what he's doing. You absolutely know what you're doing, and it's just you gotta work on keeping those voices at bay and understanding that they're only there to kind of work against you. So go ahead.
And the other thing is definitely, at least you know what the problem is. Ches and I, we hear a lot of people don't admit it, but just dealing with potential customers and stuff, it's like, wow, this person has problems, but they have no idea what the issue is. They don't know what's causing the failure. But Hamlet knows exactly what's causing him to fail. He's identified the problem, stubbornness. He knows that he's competitive. So at least that doesn't mean it's going to go away just because you understand what it is, but at least he knows what to work on and what to focus on. So good on you, Hamlet, for slowing down and really analyzing your trades and figuring out what the root cause is. Because as some people say the root cause is it's our video, my video charts, and then our shorting group. That's the reason why they're losing, is because of our shorting group that's knocking down their stock, not their own personal emotion. So way to kind of look at the mirror and just man up about it. But the final question, because I'm curious,
and then even after, if you can I say one more thing?
Oh yeah, no, go for it by all means.
Yeah, and then even after that, when I started options using that method, cutting the losers fast, and I've grown my account another $10,000.
And that's
just
the numbers
following
speak for themselves.
Just following, and I had screenshots, and it was getting ready to show you proof of all that.
If you were sitting here babbling around, I'm like, wait, what are you talking about? Then I'd probably want to see those screenshots. But I can tell by the way. Would you agree, Ches? The way he talks, he's talking in a very logical manner, like he has gone through courses. And
he's speaking from experience. Yeah, I have no doubt about that.
So thank you for the screenshots, but that won't be necessary in this case, unless you're like an MR and like, so I made $51,000 today. I'd be like, all right, let me see a screenshot to which MR did do, and we'll put that article in the show notes too, because that may pique some people's interest. But in this case, I'm not shocked at all. You understand what you're doing. You have issues. Welcome to the club. We all have issues as traders, but at least you know what the issues are. And I that's the best encouragement I can give you is, hey, it could be a lot worse. You could not know what the issue was, and that's a nasty place to be in.
And thanks to you and all your courses and everything, my life has completely turned around. with that money I have depleted my account a little bit because I have started my own business. I have started my own business now.
Oh, all right. You did. Yeah, you mentioned you started your own business, but I didn't know. So you started your own business from trading funds that you've made.
Yes.
Awesome. I'm a big advocate of entrepreneurship, so that's fantastic.
Diversification and literal freedom. Yeah. So awesome for kind of taking your financial and your business destiny in your own hands.
Yeah, you're taking your trading business profits and now reinvesting them into another business. That's well done. So are you? Can you share what this business is?
Yes, absolutely.
Well, plug it. Give us a plug. You took time out of your day to be here, so if you have a website or anything, let us know, and we'll put that in the show notes too. And if we can drive you some traffic, then that's the least we could do. So what is this new business?
So I don't have a website yet, but I'm in the process of opening, the LLC, and actually I want to create a website. I've purchased several. I think it was now I'm up to eight vans, 7 minivans, and 1 SUV. So I rent them out to Uber drivers. So
I like the idea. Nice.
Yeah. So Uber drivers, they pay me a weekly rental. So, and I have a contract in place that I do, and I spell everything out, and the things that they can do with the car that they cannot do. So it's all written within this contract. So I'm basically subleasing the cars to these Uber drivers, and I only deal with ride sharing drivers or these new apps that are popping up and especially in Boston. I live about an hour and a half from Boston, so that's where mostly my business is. So I'm up to seven minivans and 1 SUV, and the business is going great. I collect weekly rental from all these vans, and I'm actually wanting to turn it into like I said, an LLC and maybe something bigger like a ride-sharing rental business, kind of going to that route. Because in this area here, especially Boston, I live in Connecticut, so a lot of people don't even want the headache of owning a car. So it's for me, it works out great. I have some contacts around the area, so I actually have a commercial insurance on these vehicles. So for some of these individuals, it's really expensive to get all these requirements. So I was able to do that with all the profits from all my knowledge that I acquired through your courses in the market, and I'm truly doing what I love now. I couldn't be happier with the market and just doing truly what I love. I mean, corporate America was not for me at all.
That's awesome. That's straight up America right there. That's all I can really say about that. So well done, and truly awesome. That's really all I got to say about that one. But we could really talk more and more and more. But we got to start to wrap things up. So Ches, which I know you're well aware of, given you told us you listened to a lot of the podcast. But Ches owns a time machine, and maybe he'll sublease it to you, kind of use your business model. So if Ches were to sublease his time machine to you and you could go back to the start, what would be the one bit of advice you'd give yourself?
You know what? This is going to sound corny, because I know previous members have said it, but I will go back and paper trade and kind of eliminate some of that stubbornness and some of that competitive edge, and try to work that better. Kind of
try to work it out of your system without losing a few $1,000s in the process.
So you can see the $1,000 losses on paper rather than actually in your. Yeah, that's a great answer. Ches, you're up to bat, sir.
Yeah, so that's definitely something that the new listeners and kind of new people to trading could definitely kind of work on and realize that there is no room for your ego in this market. When you're wrong, just be wrong quickly or it's going to cost you. But Hamlet, it's honestly a truly inspiring story, and I know viewers and listeners out there are going to really love it. But the only question that really matters to Clay is, what is your favorite movie?
Favorite movie, I have to go back. It's not Dumb and Dumber, I'll tell you that. But
well, then delete podcast. This one's never airing.
I'll say Blue Streak, Martin Lawrence.
Is that a cop one?
He's not a cop, but he becomes a fake cop. Yeah.
Okay.
Right.
All right. Then I don't know if I've seen it, but I do know which one you're talking about.
He hides a diamond into a
No
building that was
spoilers.
under
I don't know.
construction.
If we have movie buffs here, they could be freaking out right now that you just hashtag no spoilers. I think that's how it goes. Food wise, what do you like to eat up in Connecticut?
Man, my wife and I were truly foodies. My wife is a grad from Culinary Institute of America, right in Hyde Park.
Oh, nice.
So I eat everything. I love to venture with food. We're truly foodies. But if I have to pick something, I would say Cuban food. I'm Cuban. My entire family is from Miami, so I would have to say Cuban food.
Very cool. Very cool. Now, what do you do for fun, or just outside of the market, fun or hobbies?
Right now, I love baseball. I'm truly a baseball fanatic, and I believe, Clay, you are a baseball guy too, right?
I would choose other sports, but yes, I will. I know that the Kansas City Royals won their World Series last year, so yes, I am a baseball fan, but I'm not like diehard. But yes, I do like baseball, and I played it in high school and all that good stuff.
Yeah, so baseball would say it's my my hobby, but I haven't had time to do that at all.
Because you're growing a business, man. You're growing a business, and that's fine. It's fun though, right? Do you enjoy growing the business?
Yes, it's absolutely a lot of fun, and the way I'm doing it differently than everyone else. I'm actually doing it where I care about the guys that drive for me, and they actually have benefits, and I truly try to have not a personal relationship, but
a respectable business relationship with them, right? Is probably what you're aiming for.
Yes, I absolutely. But I truly care about them, and I show that in what we have going on here. Absolutely.
Awesome. Well, I got one more question for you, but just to echo Ches, thank you very much, for being here. But I'm going to limit you to 3 words, and these 3 words need to describe what you would associate with a successful trader.
Okay, I would say perseverance.
Not staged, but that was a word used last week too, Chaz. So here we go. This is the listeners are not going to believe us, Chaz. They're going to be like, whatever, you guys totally staged all this. But all right, perseverance,
education, and you got to use this one right. Guts.
It does
That's
take
a new
guts,
one.
but
That's a new one.
I like how you preface it. You got to use it in the right way, and absolutely. And the right way is with risk management, at the forefront to use guts, because guts can easily lead to gambling, and that's not what we're trying to do here. But you do have to have guts to be a trader, no doubt about that. Well, Hamlet, again, thank you very much for taking time out of your day, especially knowing you're such a busy guy. I genuinely, as somebody that is an entrepreneur himself, I really understand how busy things can get, and I genuinely appreciate you taking, over an hour out of your day. So thank you very much.
No problem at all. It was truly a pleasure to be here, and it's like I said, your course has changed my life. So I thank you and all of your team there.
Well, go look in the mirror, man. I think you changed your life by just working hard and being smart with your money. But you're welcome. But pat
you're a
yourself
product
on the
of
back.
hard work.
Yeah, a product of hard work. So for you listeners out there, I really hope you enjoyed today's interview, because I know I did, and this was a one filled with all sorts of nuggets of wisdom. If you're listening on our site, click that share button, leave us comments below. We do read them. We like to hear from people. If you're listening on iTunes or any of the other podcast players, subscribe, leave us a rating. Those do help with rankings and, just get the word out there more. And we really do appreciate that. And then finally, for you YouTube viewers, check out the channel as a whole if you just kind of stumbled across this. A lot of different videos, live trade videos, chart analysis videos, quick tip videos. So explore the channel, and then hopefully you decide to subscribe so you can be kept up to date when any new podcast or other videos, do arrive. So thank you again to Hamlet. Thank you again to all of you listeners. We will see you back for the next episode.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.